Hello and welcome to day number 105 of our Travel Trader series, and today I want to talk to you about something that sounds rather unusual, and this is how you can get paid by buying an insurance. Obviously it's not by buying an insurance in a normal way, but something we are doing in the stock market. But first of all, let's go through some of our results. The very first thing that struck me a little bit today is that there is no index trading. The reason for it is that pretty much when I was about to start a trade to go long in the German market in the morning, there was an error in the forex, so the stock exchange that does the future trading, everything for the German market. So they had some computer issues and therefore the system was stopped, so it was stuck. And then later on it stuck like several times as well. And that's when I decided to rather go outside, enjoy the sun and leave it for the day. So we will be back to this by tomorrow again. So that's why we don't have index trading today, but I have some really cool other stuff that I want to talk to you about. First of all, let's go through some of our results for today. We have a long position in Euro US dollar, which is doing very well. We're currently up 468 US dollar. Our call position on the other side is going down a little bit, so we're now in the negative 240 euro zone. However, we still have time and we think the corn will go up eventually anyway. Our oil position is slightly down as well at minus 77 euro and 10 cents. But then we have two more short trades on the US dollar. So we have a short trade on the US dollar versus Canadian dollar, which is up 288 Canadian dollars and roughly 200 something, 220 euro I would say. And US dollar, short position US dollar Japanese yen, where we are currently up 116,000 Japanese yen, which equals a little bit more than 1,000 euro at the moment. So 1,050 euro, something like that. And then we have one position that I opened today and I closed today, and that is US dollar South African rand, and we made 533 euro and 53 cents today. And I want to talk a little bit about about the reasoning behind these trades. When you have a look at what we're currently trading, you will realize that we have actually three short trades on the US dollar. So we are short US dollar Canadian dollar, where we have the US dollar as a main influencer. We are short on US dollar Japanese yen, where we have the US dollar as a main influencer. And the third one is we are long in euro US dollar, which is the same as being short US dollar euro. So here we are also short in US dollar, although it's the other way around. We are long euro US dollar. For those of you that need some more explanation, just drop me a message and I will explain it to you in detail. But it's the same than being short US dollar euro. So we have three short trades in the US dollar. So our portfolio, our account is exposed a lot to the US dollar. And if the US dollar would go up rather than down, we would lose out in three trades at the same time. And of course, I didn't want to take that risk because I'm very risk averse. That's why I trade and don't do many other things. So I decided I want to have some security, and what I did is I wanted to be long in US dollar. That means we make money when the US dollar goes up in this trade. However, I don't want it to impact the performance of the trades in order when we are right. So I was looking for a currency pair where I could make money if the US dollar would go up. So a long position in US dollar. But also when the US dollar would go down, I wanted to have a currency pair where the second part of it dropped. Like if the US dollar drops slowly, I wanted something that drops even faster. That's why I was looking at US dollar South African rand, because I concluded that even if the US dollar would go down, the South African rand would drop further, and therefore we still might end up making money, and we would end up making money in the other positions. So I opened the three positions and then I put the fourth on US dollar South African rand, and then I waited, and this is exactly what happened. So after a while, when our US dollar Japanese yen position was doing very, very well. I moved the stop loss and I took all the risk out of it, because whatever happens now, we will always go out positive out of that trade, so I don't have any risk in there again. And the risk of the three combined was something that I hedged, so I had an insurance in case the US dollar would go up unexpectedly. We would make money on US dollar South African rand, and that would offset whatever we would lose in the other currencies. Now that I could reduce my risk exposure went down, and therefore I was able to close the US dollar South African rand trade, and as I thought we would do, I even got a profit out of it. And if you would try and translate it into the real world with buying insurance, this is basically what happens. So we had a car and we wanted to insure that against, let's say, loss in value. So if you would have an accident or something would happen to the car, we would get a premium, we would get paid by the insurance company. And what happened actually is, for some magic reason, because our car is something special or we have a special color on it or whatsoever, the price of the car, rather than going down because it crashed or rather because it burned down or whatever happened to the car, rather than the price going down, the price, because it was a special car, went up. And what happened here is that because the price of the car went up, the insurance company said, hey, that's great, your car is now worth more than it was when you started the insurance, so here, have some money, take it and be happy. So this is exactly what we did. We were able to secure our risk in terms of something bad would happen, then something good happened to us, and that led to something more good happen, because we made some money on that insurance and we eliminated some risk, and we are actually even earning money out of it. Now, in a real world scenario, that sounds completely weird and strange, and I'm totally aware out of it, but that's exactly what we did. So we bought this insurance, we reduced our risk, therefore we got paid, and we got paid even more because we're making money on all three of our US dollar trades together. So basically, as we didn't have any index trading, our only close trade today is our hedge, US dollar South African rand, made 533 euro and 53 cents out of it. And the other trades are currently up a little bit more than 1,300 euro. So we can use that as a good start in the next few days. And if everything is working fine from the computer side and the stock exchange in Germany tomorrow, I will be back to index trading, making some more money out of it. So I hope you can get a little grasp how fascinating the world of trading can be, especially when you're able to do these kind of, let's say, weird things that are absolutely possible in a stock market environment. And one of the things that I teach my students is how to build these kind of portfolios and hedge their risks as well. So we are able to do kind of crazy things which are very, very rewarding, and hope that gave you some impression on what's possible. Thank you very much for watching. Looking forward to talk to you again tomorrow, and yeah, hope we are having some nice, interesting trades by then. Thank you very much. Have a great evening and goodbye.